Hey there, it's Casey Dimon here, TaxAllAcademy.com with a quick tip of the day for you. And today we're talking about the currently due taxes. Now, in a traditional real estate transaction, the taxes that are owed against a piece of property will be prorated down to the date of closing. And this will differ from a tax deed property in just about every state. When you buy a tax deed property, you will be responsible for the entire year's worth of taxes that are owed on that property in the year in which you purchased it. So for example, if you buy a piece of property in October, you will still have to pay the 9 months worth of taxes prior to your purchase date, even though you didn't own it then. So you have to pay the entire year. Now, if you're running on such thin margins that this really concerns you, well, you shouldn't be running on margins that tight. You need to learn how to build more profit into your deals, because paying 1 year's worth of taxes shouldn't have that large of an impact on your deal. But as far as budgeting and that kind of stuff, it's something you need to take into consideration. There's a lot of people that like to take care of any expenses of the property right away, right after the auction. And there's some people that will hold a piece of property for 1 year or 2 years before they're able to sell it. So not only do you have to pay the purchase price, but you also have to pay the taxes that are due for the year in which you purchased it. Now, there are certainly ways around this, and a lot of the Academy members will buy a piece of property and they know that they owe those taxes, and they will sell it with those taxes due. Of course, they'll disclose it, and they might even give a discount on the property because those taxes are due, but it allows them to not have to inject any additional capital, and they can often resell the property within a week or 2 weeks or maybe even a month. And again, they take those taxes and pass them from the county, and the county billing them to the new owner. And of course, when it's disclosed, it's not that big of a deal. So there's certainly ways around it, but it's something that you really need to take into consideration. And a lot of people will get that tax bill that they weren't expecting. That's it for today, folks. For more information on tax law investing, head on over to TaxAllAcademy.com. Take care. Bye-bye.